Hey guys, welcome back to the video of learning to trade. So basically today it's going to be very long video explaining how did I start making money in forex or any market or stock market or anything, and what is my key finding till now from trading all sorts of market. I trade metals, I trade forex, I trade indices and commodities and everything that moves. But literally, there are so many clutters when it comes to trading or learning to trade, or there's so many things, and the content is so high. And if you go to any social media platform, there will be one or the other guys telling you how to make money in stock market just with some few minutes. Is it that easy? Of course, it's not. And I don't want to push you to the negativity from the beginning. And basically, I wanted to give you an approach to the trading and give my finding to all the techniques and analyses or indicators or technical analysis, fundamental or whatever type of analysis in the market. So if you find this video is very slow, you can just adjust the speed so you can watch it fast. So basically, I'll start from the very fundamental what I believe in till now after having a multiple years of experience, more than 7 to 8 years. So and first of all, technical analysis, some sort of astrology in trading, and people are making it so complicated and useless. So more and more complicated it is, more and more useless it becomes, because nobody knows where the price will move from one direction to other. That all depend on the next upcoming orders in the market book, and the upcoming orders are haven't been built or haven't been executed. So how do you really predict the future? By looking at the past few candles or action or average line or any sort of indicator? It doesn't really work that way. So what really matters is understanding the price itself. If you put a lot of indicators, you don't understand the price. You just keep on watching the borders, not the exact thing. So so the basic fundamental idea in trading that I have been following is price is everything. So you don't need anything except price. So this price, whatever you're seeing, it's Nasdaq 100 on 4 hour time frame. Price is everything. I mean, this price itself tells you everything you need to know about this right now. And you don't need anything except that. You don't need any sort of indicators, volume profiles, technical analysis, average line, or pivot points, or support resistance. You don't need anything. You don't need SMC, ICT, this, that. If there is someone who can code an indicator and make money out of it, all the engineers who knows coding or your neighbors, you can just pay $100 and ask him to code, and you can make $1 billion out of it. It doesn't really work that way. The human discretion is everything. So who wants money? Human beings wants money, not the computer. So that is it. Human discretion is everything, and discretionary trading is everything. And systematically, there's an edge. There's You can build a system to go with some sort of patterns to follow, or the price rejection, reversal, or entry exit. You can build a system, but you can't tell a robot to make money for you. That doesn't work that way. It doesn't work that way. You need a human discretion for everything, because whatever price you're expecting, let's assume you are expecting the prices to move um, somewhere here, just to test the support and move further up and to come down and make it trade in the zone. All the thing that you expect is never been happened, it never been executed. And how can you accept something that has never happened? It's like a toss. Is it? Tossing a coin is better than that. Then what would be the real approach to trading then? So you actually don't know what is going to happen. So that you should know that first. The rule number one is we don't know. We don't know where the price will go. And price, whatever, where the price will go, and the answer is we don't know. Okay, not just we, nobody in the universe knows where the price. Okay, the spelling shit. Nobody in the universe know where the price will go. You don't need a guru to tell you to learn this indicator and that will predict and price. Seriously, seriously. So, so basic idea is price is everything. First idea is price is everything. Whatever you see on the chart, the price candlestick or a line chart, that is enough. I mean, that's everything. You might see this as some sort of contrary to what people say to follow a system, this, that, but nothing works in the market. If making money is that easy, nobody would have been studying 25 years of their life to get an average job that they have to work till they die to make money out of it. I mean, just to make a paycheck to paycheck, they have to spend 25 years. And if you can do this by automating a small algorithm, seriously, you think making money is that easy? No, in real world, it is not easy. Maybe in some sort of fantasy, it might be. So basic idea is price is everything. And where does the price go? We don't know. Nobody knows. Nobody in the planet knows where the price is going. Then what are we doing here if we don't know? So what we can do is we can predict based on probabilities. Okay, I'm saying the same thing what everybody says. Then why are you doing it? Why are you making an additional video? So there's no need. It's not like that. So we can predict or we can project the price on probability basis. So basic understanding of an indices. Most of the shares will be bought based on the earnings, whatever fundamental reasons. Shares will be bought, and it will reflect in the index calculations as well. So the price of the index will go up. And that's the basic idea. Basic bullish person thinks every dip will be bought, or if the price correct to some point, it will be bought. So that's the basic idea of trading an indices. Most of the time, it will be sideways to bullish. So the easiest option to trade indices is buying dip. So if you keep on buying all the dip, you're gonna blow up. So what do? You have to buy only some dips that makes money, not all the dips. So the question is which dip to buy. Is it so same thing I'm going to show in the chart itself. Okay, what is wrong with this? Get out. Okay, let's assume this is one dip. This is one support zone or liquidity zone. So price might reverse from here. And this is another support zone, another blue line, or I can make it more visual. So it will be nice to see. Where did I keep all those things? This is one support area, and the second support area is somewhere here. And whatever support area that I drew might not be the exact one. Okay. Oh, well, let's assume there's a support resistance channel. Let's say based on the pivot point. So this is just a pivot point. So you can use a normal pivots as well, or this. There's no big. I mean, this is a basic pivot point. I'll just keep the pivot period as 5. It will just create, tell the high and low of previous 5 candles. So I'll just keep the width very low. Whole chart looks so messy. 0.5 is much. Okay, there's no 0.5. Fine. So based on pivot point, there is one more support here, possible one, and I have one more support here. This is my identification. There's this, you can see the two candle. I mean, the two candles here, double bottom reversal, some sort of. I mean, that is one sort of support, and the second is here. So now the question is, price might reverse from this point, point A. So price might reverse from this point, that is one, and it might reverse from this point. This is so, or it might take another toll all the way to down. There's a two. So which dip you're gonna buy, or the existing one? This is itself is a dip. It will directly go test another. So there is multiple options here. There's option 1, option 2, option 3. So we know the indices will reverse from the dips. So we don't know which dip is it. So let's find out. Okay, to touch the resistance, it has taken a dip from here only. So which is the second resistance. Okay, this is the second. So sorry, this is support. What I'm talking about. So price has reversed from the second support, and we don't need anything else. Just keep the same thing. Okay, this is all. We'll remove everything. So in our analysis, there are so many possibilities. The price could hit here or here itself or the down. We don't know where. So price has taken a toll or taken a reverse from the second support itself. We have drew the first support here. So if you kept the stop loss somewhere here, it would have gone. It has taken a reversal from the second support itself. So nobody knew this. Nobody knew this would happen. So how do you make money out of it? Let's see if you are waiting for the rejection candles. Let's assume price try to test here and the rejection candle is not so strong. We can't make a decision out of it. Then it again went up and absorbed some more liquidity from the bottom. So how do you judge this will be a rejection? So let's put a price. There's a price action, candlestick patterns. Okay, let's put a candlestick pattern and see. Okay, here is a bearish engulfing near the support. This would be a possible entry signal. So if you entered here, your stop loss would be all the way not in the range, it will be outside of the range. So let's assume you entered here. Your stop loss would be outside of the range, which is 2.31%. And where will be your target? You don't know the target. You can just trail it, right? Let's assume you have kept the stop loss 2.3 and you keep trailing and keep going, and let's assume so you will exit when this low has broken. Okay, this is again a market structure bearish. So if that low is broken, you're gonna exit. So yeah, that low is broken. So your target would have been just this. Your risk is 2%, your target is 1%. If you trailed it, if you kept 1:1, it would have been hit. Target would have been hit 1:1. What you will do if you have a 1:1 risk reward, then your prediction capacity should be very high. It should be more than 60%. Do you have a 60% accuracy in predicting the direction? You really might not have it. Like, that's the problem, right? So based on this, what we can find out is nobody knows where the price will go. Then what are you doing here? So instead of betting on the bearish engulfing pattern, there's one more thing you can do it to be make it more smartly. What is that smartly? It's nothing but you can see a reversal wick from here. This zone is a reversal, right? So this zone is a reversal zone. This is a reversal zone. Whenever, so it has reversed from here. This is one bottom, the second bottom, and third bottom, and it's hard to, you know, there's two way to analyze it. Whenever the price come to the same support zone again and again and again, and one thinking is it can become weaker, right? And the second one is it is absorbing all the sell orders, right? So it is becoming more and more weak. The other thing is, I mean, there's another theory that whenever the price hits the same support again and again, the that support will become so strong. Which one is right? If you back test, there's no right or wrong, and nobody knows which is right or wrong. That's the reality. So the best option for you, if you want to, if your accuracy is low, then you should be entering in the price rejection zone only. That is almost here. So you keep buy order here, and you can keep the stop loss somewhere below this range. So let's assume if you keep a stop loss of what, 0.7%, you would have been getting a 3%. That's almost more than 1 is to 4. So that is one way of trading. And there are two approaches to trading. One is after confirmation. After confirmation is the bullish engulfing. After the bullish engulfing is formed, you can literally enter a trade. Second thing is whenever the price hits the liquidity zone, that is something like, I'll show you. Okay, this is the bottom. This is the bottom. Again, price will hit the same bottom again. Let's see. So price hit the same bottom and absorbed all the, you know, orders, and it's going up. So you can literally see. So even if you're entering on the closing price, let's say, you can keep the SL, and you can keep target 4 times more than this. Okay, around 44. So that's what. Yes. So you hit the profit. So this is one way of. So if you lost $10,000 here, so you'll have another opportunity looking at it. There are two options. I mean, there were two approaches to trading. One is after the confirmation and before confirmation. Before confirmation is more risky, but you'll get 1 is to 4 risk reward. After the confirmation is less risky, but the risk reward is 1 is to 1 and less than that. And you choose what you want to do. And if I were you, I would have bought the second option, which is like entering on the rejection candle itself, not waiting for the confirmation. So there's two things. So that is done. And now the price is at all-time high zone. So how do you trade this? How do you trade this? There's no way to trade all-time high. How to trade the all-time high zone? It's untested water. There's no levels. There's no support resistance, nothing. So let's try to. So this is also a very, very strong hammer candle. It says that from here the market will go all the way to the moon, but it's not. It won't go. It just absorbed all the sell orders, and all it just taken all the stop loss. People who are shorting here, people have put the short order somewhere here. It has taken all the orders. That's it. And always the banks and big institution, they always go against the retail orders because they want liquidity. That's it. Simple. It's in a short term, it's a zero sum game. Your money goes to somebody else and their money comes to you. So there's literally nothing. It's like a proper gambling. So I'm not discouraging anything. So my intention is don't waste money on courses on gurus or something like that. There's nothing. They don't know anything. I mean, even if they know, they can make $1 million. And there's so many people in the market for just 15% year on year return. They might give you as much as high funding as possible. They are ready to give $1 billion as well if you can generate 15% return consistently for next 10 years. So it's not possible. It's not easy, and nobody knows. There's a market risk, and there's so much market risk. You can't really predict anything on the future. That's what nobody knows where the price goes. It just your systems, and if you can generate very nice risk reward, if you have a positive edge, or somewhat you can make out of 10 trades, if you can make a $1 profit after all your stop loss is gone, you can still trade. If you're making losses in trading, and try and demo and first become a profitable, then trade. So um, so let's see how the price will reverse. So based on this, we can what we can say, where is the MSP? So so I want to tell you, so I can challenge the SMC guys as well now. So what happened here is, based on the market structure breakout, here is a market structure has broken down and it tested and came down. Okay. Then it has tested, I mean, then another market structure break is here. It has broken here. The problem here is, after the breaking of market structure, you have to wait for order block for taking a trade. So this is order block. This is a clean buy. Just press the buy and just go, go, go. Let's make money. It's not how it is, right? Okay, let's say, so this is an order block, and again it has to test somewhere here, and its market should go up and break this and make at least $10,000 profit. It doesn't work that way. It doesn't really work that way. There's no strict rule that this has to follow. So whatever market has behaved here is based on the orders that were there at that time. So it's nothing about a concept or something like that. So there's a rejection candle here. It's a clean engulfing, right? It's a very this is a very good rejection candle. You can enter here. So it's not easy. I mean, nothing works in the market. You should know that. So if you simplify how you want to learn, so if you want to complicate, that's up to you. You want to complicate, you want to simplify. So I wanted to simplify it, because the more and more complex you make it, more and more difficult it is to find out what exactly the price is doing. So in basic price action concept, what you will observe is, so price has taken, tested here and reached the top, and again it came down to absorb some more liquidity, and again couldn't break the high of this, which is bearish. So we got to know after this happened, right? Not able to tell before it happened. So is there any way to predict it? No, there's no way to predict. There's absolutely no way to predict it. And you should be coming from the future. Because these orders are not yet executed. I mean, what are the orders are coming, or whatever the bid ask is going to execute it in next couple of days, you don't know, right? So if you don't know, then how do you make money? So how do you make money? So you can make money by simplifying stuff. Instead of going for complex pattern like SMC, ICT, this, that, whatever technical analysis to give you, You can just simplify it. So, so how do you simplify? Pretty easy. So from here to here, this is bearish. From here to here, this is bullish. Okay, that's all. So this we got to know after the market, whatever is happened, right? We don't know before. So nobody knows from this point market would reverse all the way to here. Then how do you then how to trade and how to make money out of it? There's no simple answers to this. The only answer is you just have to take a bet, and you just have to take a bet and see does it go up or down. There's no fixed way, but the one system can't fit in all the markets conditions like bullish, bearish, sideways. Okay, how do we simplify it? You can simplify this in just two ways. I'll tell you how to do this. You don't need complex indicators, complex technology or whatever. You don't need to know how to code and crack the whatever nut. You just have to identify range. The second is direction. So what is direction? What is range? Range is nothing but the price is, hovering within the zone of high and low of few candles. And I can do it manually versus you can use some of the algos to find out. I mean, both the way it works. So if I draw the box manually, it is like everything is discretion. You see this box, you won't see this box. You always see what you wanted to see. So it is not always this. I mean, discretionary. If you do everything, what happens is, if you wanted to see a bullish, you see the bullish candles only. If you wanted to see a bearish trade, you see a bearish setups, and it's not what exact market is saying to you. It is what exact you are thinking. It just in the market in the chart you are trading yourself, you're not trading the market, and it is like that. It's so funny that everybody says the same. And so there's a support resistance channel. Okay, this is a channel again. Consolidation. Okay. Okay, so whatever the in the boxes you see, it's a consolidation. Whatever outside the boxes, it's a range. This was a range and broken out, and it was then it rejected. In a straightforward sense, it should broken out and goes up from here only, but there's not enough orders from that. There's a technical signal to go up from here. There's a bullish signal here. If the range break, I mean, there's a bullish signal here, one, right? And there's a bullish signal here. It is also broken, and it is broken on the downside. I'm not taking a bearish trade now because the structure is bullish, higher high. So again, there is another option, is a bullish trade here, right? There's one bullish trade is in a profitable, second bullish trade is not profitable, third is profitable. So if you take three trades, you win two. Still, there is a positive expectancy. Again, what happens is here there's another, um, prices came to the reversal, fib reversal zone of 0.5. This is also a buy for you, but the problem here is you don't know how much it will go. So with the range consolidation, you can accept that price might go to 1300, but this time it didn't go. There's not enough order. There's not enough liquidity to pull the price to that same range. It just reversed from the mid. So that's what we don't know. So what happened? It's okay. So So I don't want to make a very long video. I wanted to tell you in very simple. There's a lot of videos incoming. So in this, if you're watching this till the end, so there's something to understand. You don't you don't need any indicator. Okay, you don't need fancy theories like SMC, ICT, and whatever, whatnot. I don't even know what extra. I mean, what are the things selling in the market now? But so price tells you everything, and price action is enough. And why I'm saying this, because all sort of indicator is just study of price itself. It's all the shadows of price action itself. There's It's not going to tell you all the stories. So here the market is bullish. All the possible bullish trades, if you take it, you'll make money. So here there's a one bullish trade. You know, if you take the if you keep the SL below low, you'll make money. And here is another trade continuation or same. There's another bull pullback. There's another pullback. There's another pullback. There's another pullback. So you lost. I mean, if you traded this, so you'll be losing here, and we'll be losing here. Out of one, two, three, four win, we out of total six trades, we'll be losing two trades and winning four trades, which is still some sort of money. So how much do you capture it? Do you capture 1:2, or you keep trailing the below the lows of two candle or one candle, whatever? It's again that determines how much money do you do. If you do trailing, you don't lose money here. Okay, this is for your pocket. I mean, keep trailing, and you buy here. Uh, so it's coming and absorbing the same range again and again. You can see the few 5 6 candles, right? It's a almost a day. It is coming to the same range. Buy. So if you buy here, so you keep trailing and you don't lose it. Your stop loss won't be hit. You'll be even exiting at the break even, right? Here, if you buy it, you keep trailing, you will be exited here. If you keep a stop loss, you'll be exited here. So it's literally like there's no one single system to capture all the market movement. There's no one single indicator to do that. If somebody is selling you that one particular indicator to capture all the I mean all the types of market, it is not true. That thing then that never exists. So the easiest way to understand the prices, just observe the candle itself. Don't bring anything extra, so that you will grab what price is trying to tell to you. So this is just this video here. You understand what is the difference between range and what's the difference between direction. And price tells you everything. You don't need any extra whatever astrology to predict. And price action is enough. You don't need any extra stuff, any sort of knowledge or indicator, statistical analysis, quant analysis, what not. You don't need anything. You just need to watch price itself. And about again the trading in the different time frames, right? If you're trading in the different time frames, and you want to check the weekly, if you want to check the daily and in monthly and combine it with five more indicators, and you don't need that. Just if you're trading on 4 hours or 2 hours, that's enough. You don't need what do you do in one day? One day won't be closed. If you're trading in 2 hours, why do you need one day candle? It's not. It's like All the gurus or whoever, they want to introduce so many stuff to make you confused. There are like, if you look at the library of TradingView itself, there are like thousands and thousands of indicators, and you'll be confused. You'll be backtesting everything, and it'll take you 6 to 7 months or 1 year, or if you're faster enough, it might not kill your time, but it will just kill your so much time so that you miss the easiest cream here, right? So basic Dow theory is enough to make money. And if you want to complicate it so much, you won't even make that money. I mean, if you complicate too much, there's no money. If you don't complicate enough, there's little money in the market. But if somebody is selling you some stuff, don't buy it, because there's no single indicator in the planet that can give you consistent return for the lifetime, and it will make you rich, and you just have to chill, and that product, that utopia concept is never exist. And what's going to happen in next few hours, that order is not placed yet, that's not happened yet, right? If that has not happened yet, how can you predict now? That's my questions. So this is it for today, guys. So in this video, we just understand price action is everything. Price tells you everything. You just have to identify range and direction. You don't need any indicator. You don't need any fancy theories. You don't need multiple time frames to look at. You just watch one time frame, one candlestick. Candlestick itself is a technical whatever, but still, just watch the price itself in a one time frame. Just go to the 2 hour time frame, 4 hour time frame, and watch the price itself and see what is price doing. That is enough. In step one, identify range and direction. We'll go to the next step of in the couple of other videos, I'll be going to how to identify the ranges and range breakout and price action, in the sense market structure like higher high, higher low. This is all very basic. There's nothing new you're going to learn here, but something you have to watch very carefully is, without having any other mess, just observe the price itself in a different ranges where it reverses from, and all the things like that. Okay, thank you for watching, guys. Please like, share, comment for some more updates, and never miss a video from this channel. I'll be catching you up in another video.